Welcome back, everyone, to the Schaefer Stock Market Podcast. This is Josh Selway talking to you again. I'm an editor at Schaefer's Investment Research, and we have a lot to get through this week. I wanted to start with just a quick rundown of some of what we've seen in earnings season. We had last week JP Morgan Chase issue a strong earnings report, and this came after the CEOs of the big banks were in Washington, D.C. to testify before members of Congress. Many members of Congress were on the offense going after these CEOs. There was a lot of talk on Twitter, a lot of videos and clips from these hearings where members of Congress were questioning how much the CEOs are getting paid compared to lower employees. So there was a lot of ridicule about that on social media especially. And the very next day, on Friday, you had JP Morgan, Goldman Sachs report pretty strong numbers. In fact, the JP Morgan report helped lift the Dow that day. And going into this week, you've had some more mixed results actually from the financial sector. But the big one has been healthcare. Healthcare stocks since last week have been getting hit hard. And I'm talking especially health insurance stocks like UnitedHealth, and you had hospital operators like Tenet Healthcare. What's really causing this weakness is this expanded talk about Medicare for all from members of Congress, other Democrats, especially Bernie Sanders, who helped introduce a Medicare for all bill. And then you had this Bernie Sanders town hall on Fox that got a lot of publicity, and especially this clip I've seen passed around many times of him asking how many people would be in favor for Medicare for all instead of what's happening now, and many people in the crowd raised their hands. So there seems to be this growing momentum around this issue, especially as more polls come out for the 2020 election and especially Democratic primaries, obviously. So more focus being pushed toward this Medicare for all, and you're seeing healthcare stocks get crushed as a result. Last Friday, we actually wrote about the tremendous options activity that we saw on Anthem, ticker ANTM, as well as UnitedHealth. Those options activity on those stocks were near 52-week highs as they were getting crushed. They actually were pacing for their worst week in, I believe, over a decade, and that weakness has continued. And this even came as UnitedHealth delivered a strong quarter, and they even issued a pretty notable, what one analyst called a notable guidance for 2019. It was a strong forecast that many were not expecting following all this uncertainty in the healthcare sector. Even with that strong quarter, UnitedHealth pulling back, their CEO on the earnings call mentioned Medicare for all and said that it would destabilize the U.S. healthcare sector and then essentially it would be bad for everyone. Not surprising to hear him say that. Of course, this is just going to be an ongoing battle, and as 2020 looms closer, I already talked about before about the healthcare sector related to drug pricing, because that is something that many Democrats and Republicans want to take on, but now we have weakness coming from health insurers. And I guess I could touch on real quick, since we're talking about earnings in healthcare, I wanted to throw in J&J, Johnson & Johnson. They had a strong quarter as well, and that was thanks to strength out of their pharmaceuticals business, where they saw a strong increase, especially in some of their oncology drugs, cancer drugs, really helped propel that company's quarter. More broadly speaking, though, we just also wrote about some of the options activity taking place on the healthcare sector, ETF XLV, and it looks like short-term traders are expecting more downside from this ETF, the exchange traded fund. This encompasses many names in the healthcare space, and not surprisingly, it's been getting crushed just today, making a strong move below its 200-day moving average. XLV would seem to suggest that there's more weakness ahead. At least that's what options traders are expecting out of the healthcare space going forward. And I already mentioned Tenet Healthcare, ticker THC. It is one of the worst performers on the New York Stock Exchange today. We highlighted this stock in our midday market check, which is a free newsletter you can sign up to. But THC shares at the time of our writing were down more than 10% today, and again, that comes after huge losses in the past few days already. So these stocks are getting hammered. They're pacing for one of their worst months in over a decade, I've seen headlines. So just certainly something to keep an eye out, a huge sector in the stock market and a huge part of the economy that right now there's a lot of uncertainty around. Another group of stocks I wanted to look at real quick is cosmetics, and especially this analyst note I was reading about earlier in the week on Ulta Beauty, ticker ELF. This was out of D.A. Davidson, which discussed the company's increased shelf space at Target and saying that ELF's shelf space has overtaken rival Coty, that is ticker COTY, and that has overtaken that company's CoverGirl brand. So that's obviously a very popular brand, and that was notable to me to see that ELF Beauty has overtaken Coty's CoverGirl brand at Target. It's actually the third most popular, judging by shelf space right now. That is ELF Beauty's products. Now, D.A. Davidson said that ELF stock deserves a higher premium now that it's going back into growth mode, and it sees a lot of upside ahead. It actually doubled its price target on the stock to $15 from $7. ELF shares have been moving higher in recent weeks. They've been in a strong uptrend. In 2019, they were last seen pacing for their highest close in a few months, trading around $12.60 per share. Another makeup stock that is trading at fresh highs is Ulta Beauty, ticker ULTA. JP Morgan Securities just raised its price target on that stock to $390 per share. Right now, Ulta is trading around $356 per share, so significant upside there projected from JP Morgan on Ulta Beauty, saying that it is well positioned for top line growth going forward. And this came right as Morgan Stanley also raised its price target on Ulta Beauty. This has been a stock that's been gaining momentum in recent months. If you pull up a chart of Ulta Beauty, it's a pretty strong uptrend in 2019, and that was after a somewhat turbulent 2018. Prior to that, in recent years, Ulta was a big winner. It was a popular name, and it seems to be regaining traction now. Again, trading at fresh highs, and this is Ulta Beauty. Analysts really like its upside potential because it uses influencers really well, especially Kylie Jenner. It's one of its big one. It has a Kylie Jenner makeup line, so that has been big for Ulta Beauty and has driven that stock to fresh highs. I should at least point out this rally in Disney shares. Disney rallied at the end of last week, actually, after it released the details of its Disney Plus streaming service. It's much cheaper than Netflix, and there was actually an analyst this week at Needham that projected this Disney Plus growth could be a bullish sign for Roku. Roku is the other streaming platform stock, and it's just went public in recent years. It's been a strong performer, and Needham slapped a $85 price target on Roku and sees that Disney Plus could be a billion-dollar upside driver for the company, which the stock was last seen trading just around $58 per share. And again, an $85 price target out of Needham for Roku. Again, another ambitious price target, and this is for a growth stock, a young growth stock in Roku, who is right smack dab in the center of these streaming wars, which has been a big story on Wall Street, especially after this Disney Plus announcement. And you just had Netflix earnings, but Reed Hastings came out, the CEO of Netflix, and said that he's not concerned about all this increased competition because he says that users will be picking from a variety of these services, essentially. And if you're Netflix, I'm sure you have to like the moat you have, at least at the moment, with all the original content, just the brand, the brand loyalty Netflix brings to the table. Being the nerd that I am, I have to call out this fresh PlayStation 5 buzz that put Advanced Micro Devices, ticker AMD, at the center of the headlines. AMD makes processors for the video game industry, and Wired reported that AMD chips are, quote, at the heart of, unquote, Sony's next PlayStation, the PlayStation 5. So that'll be something to watch out going forward if that is indeed the case, as Wired reported. I also need to discuss marijuana stocks because there's continued to be heavy news out of that space, and it's quite fascinating to follow the growth of this sector. We're going to start on the bearish side of things, where we had Citron Research, the infamous short seller Andrew Left led Citron Research, discussed Village Farms International. Citron was calling for the SEC to investigate the company. That sent that stock down double-digit percentage points. That is ticker VFF, Village Farms International. Another marijuana stock that was under pressure was Kronos Group, ticker CRON, and that was after Bank of America Merrill Lynch set a $13 price target, which was well below the stock's current price, around $16. So again, CRON, a bearish note out of Bank of America Merrill Lynch, which on the other hand, B of A Merrill Lynch initiated coverage on Aurora Cannabis, ticker ACB, and Canopy Growth, ticker CGC, with buy ratings. The analyst note liked the company's abilities to scale their businesses, especially for Aurora Cannabis. It discussed how Aurora's kept its margins strong, and it looks well positioned to serve the global marijuana market. And again, this is such a young industry. The key is which companies can grow and handle the growth and uncertainty, frankly, since there's not a path to legalization yet in the U.S., and it's unclear how this situation is going to unfold, especially with the Attorney General Anthony Barr recently giving an iffy stance on this bill to help states facilitate legalized marijuana and give them more freedom as far as financing their marijuana businesses. So what you need to look for is which businesses are already executing here, and analysts believe, at least at Bank of America Merrill Lynch, that Aurora Cannabis and Canopy Growth have the potential to address these broader markets and could have more upside in the near term. All right, just a couple quick hitters here before I let you go. I wanted to point out this recent focus on fintech stocks or financial technology stocks that help facilitate electronic trading and fixed income securities, and there's been a lot more attention paid to this group, and they've really been performing well. Two names in particular that we covered recently over at schaefersresearch.com are Market Access Holdings, ticker MKTX, and Tradeweb Market, ticker TW. Tradeweb actually just went public in April, so this is a very young stock. And Rosenblatt Securities came in and issued a note calling these stocks, quote, unique assets that deserve lofty valuations. So Rosenblatt sees a lot of growth ahead for both these companies, but especially Tradeweb Market, especially due to its expanded electronic trading adoption and analytics capabilities. It sees a lot of upside ahead there. And again, financial technology stocks or fintech stocks that bring analytics and other things into the trading realm have been gaining a lot of popularity on Wall Street. And finally, Tiger Woods. Tiger Woods' name pops up on Wall Street because, well, when Tiger's doing well, that's good for the game of golf. And in particular, Callaway Golf, ticker ELY, saw an uptick right after Tiger Woods won his first major golf title in more than a decade, and that led to increased options trading on Callaway Golf. So that was an interesting takeaway. Someone asked me about Nike stock, whether Tiger's win really helped Nike stock. It didn't really. Nike's still holding around all-time highs, but that's the thing. I just figured that Nike's been doing so well already. There wasn't that much room for upside there. It may have already been priced in for that. Okay, I'm going to leave it right there for this episode of the Schaefer Stock Market Podcast. Thank you so much for listening. We continue to get more and more downloads and listeners along with the Schaefer Stock Market Podcast. Every single week I will be here talking about random things, trying to help people stay up to date on the financial markets and some of the things happening out there in the financial world. Enjoy your long weekend. If you're interested, we have a new indicator of the week over at schaefersresearch.com presented by Schaefer Senior Quantitative Analyst Rocky White, which looks at historical data around Easter and gives a list of some of the best performing and worst performing stocks around the holiday. But otherwise, I suggest everyone go check out schaefersresearch.com and our free newsletters and some of our trading products too if you're interested in that. But until next time, this was Josh Selway again. Talk to you soon.